Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to all our viewers. You're watching Countdown right here on Bloomberg Quint. The markets today seem to have started off on a softer note and carried on with the intraday losses, with the Nifty now below the 10,700 mark, down closer to 1% in fact. We'll talk about all of that and more in just a few moments, but let me get you through the headlines. Markets are witnessing a pullback after yesterday's surge. The Nifty trades around the 10,700 mark, in fact below it now, with most sectoral indices trading with cuts. GAIL is the top gainer on the Nifty after Goldman Sachs upgraded the counter to a buy. It also raised its price target to 490 rupees. Yes Bank, however, is the top loser on the Nifty after another resignation from the board. The lender has also secured a nod from the promoters to overhaul the board. And Shapoorji Pallonji Group will make its debut on the bourses with its solar firm. Other businesses like Eureka Forbes may follow. That's a Bloomberg exclusive. Well, Neeraj, good afternoon. Taking a look at the markets today, doesn't look like we're following through yesterday's session.
No, not quite. No big drop down, but yeah, we're certainly trading in or around the lowest point of the day for the market. So sub 10,700. Not that it's a level that really means something too dramatic, but yeah, sub 10,700. The Sensex and the Nifty Bank too have come off, albeit not as much, but the market breadth has looked poor. I think 2:1 in favor of the declines at about lunch, and I think it would have worsened. So the advanced decline will come up on your screen. It has worsened. We are now trading at the worst point of the day in terms of the market breadth, close to 3:1 in favor of the decline. So the market breadth has looked terrible. I'll just bring up the heat map and then request my producer to bring up the Nifty 500 MRR function as well for today. But firstly, the heat map for the Nifty. Metals, Yes Bank and IT, that's the three pockets really which have corrected quite strongly. Both metals and IT have looked very, very weak in the session today, albeit for multiple reasons, including commodity price behavior and the currency strength. So that's one thing to monitor. And Yes Bank clearly under the stress in session today as well, so not looking all that great. On the gaining side, some gains to GAIL, but that's not a heavyweight in the truest of sense. I think the problem in today's session is that but for HDFC Bank and HUL, which are also marginally in the green, we don't have heavyweights powering the index on the upside, and that's been a bit of a pickle. So not the best of days from a large cap trading perspective. What about mid caps? I'll just quickly look at the Nifty 500 MRR function on the Bloomberg terminal and just show you what's moved and what's not. So ITI, some gains, Dredging Corporation, some gains. You can clearly see that some PSUs have some gains. Page Industries up about 4.5, so that's not done bad. 2 days on a trot now. Page Industries has had some gains after falling about 26-27%. The much needed reversal of sorts for Page Industries. On the downside, as we said, Yes Bank continues to grind lower. ICICI Securities is amongst the stocks which has corrected quite a bit. Vinati Organics from the specialty chemical space corrects a little bit in the session today. And Deepak Fertilizers continues to grind lower. Ever since this news of this IT rate, it's had more down days than up days, but some pressure points for Deepak Fertilizers as well. But that sums up the activity in the cash markets. What about the derivative markets? Agam Vakil is here to take us through that. Agam, how's trade shaping up? Has it changed dramatically in the last 45 minutes?
Neeraj, we are looking at weakness, that's certain, and we have started seeing accumulation in open interest towards shorts at this point in time. So, well, there has been a change in certain parameters. Let's pull up the futures and options space, and let's pull up futures specifically and take a look at the Nifty. So, there's been an increase of another 2% towards shorts at around 10,685. Again, when it comes to the Nifty banking futures, we are seeing weakness there as well, and another 5.5% added in open interest there as well. Let's take going down to the India volatility index. You know, surprisingly, this has come off, but it's still above the mark of 19, and we continue to watch out for this one. A lot of analysts are of the opinion that unless and until it doesn't come below the mark of 16, there is always going to be some amount of danger with respect to volatility going ahead. But open interest distribution, while your levels still stand, nothing must have changed in your total open interest distribution when it comes to maximum OI. But in changes in your open interest, so we have seen more and more writing in the higher level calls, especially given the fact that we're seeing so the Nifty come off to a certain extent. 3 stocks that I want to address. First one is Just Dial, and this one is advancing once again. So we have seen strength here, 49% increase in OI. Allahabad Bank is the other one. That's also moving, and especially on the back of change in OI. Longs there as well. And Repco Home Finance is the third one, which is actually on the losing end. 17% added in OI towards fresh shorts. So, mixed cues there when it comes to some of those stocks, but on the whole, the Nifty is lost out in 10,700, and we're going to have to keep a close eye on that one.
All right, Agam, thanks a lot for that. That's the F&O picture right now at this juncture, with the Nifty looking slightly more wobbly, closer to about 0.7% given up. But we're here to talk about stocks and address specific company news. PSB Projects is in focus after the company bagged a new project worth 372 crores. To discuss details of these projects, we are now joined on the phone line by the CMD and CEO, Mr. P.S. Patel. Sir, thanks, Patel, I'm sorry. Sir, thanks very much for joining in. Let's talk a little bit more about this order that you have got. Let's talk about the timeline. When exactly are you seeing the money coming in, and what does this take the total order book position to?
Total order book outstanding as of now, after March, this year infusion is about 802 crore. And if we include these new orders, then the total outstanding order book will reach to 2,700 crore.
All right.
Hello.
So could you give us more details about this project? What does it entail?
Yeah, there are 2 institutional projects. One is for a hospital from Torrent Group at Surat Kamrej, and the second project is from Ahmedabad University, which is we are already working in Ahmedabad University. So this is one sports academy building, which we have got the order. There is one more tender from Pandharpur, that it's a Pradhan Mantri Awas Yojana, that is 175 crores. And one tender is from CG Road, Ahmedabad Municipal Corporation, Ahmedabad, that is the redevelopment of CG Road.
So when does the realization of this order happen? As in, if you could give me a timeline, and when does it start showing up?
So we have just received the order, so realizations to some extent will start after 1 or 2 months. So, and the total timeline for all the average project will be considered 24 months.
Okay. I'm guessing you don't need to raise any kind of capitals to execute any of these orders, Mr. Patel?
No, sir. No, sir. As of now, it is not required.
What about the debt levels in the company, and what's the current rate of interest that you have to give for the debt?
Sir, actually, we are a zero debt company. Presently, we are not having any debt.
But for the working capital?
For the working capital, mostly we are utilizing our fund from the FTOD. So there is a difference of 0.7 or 1% maximum against our FD.
It's interesting that an infra company which has the ability to use debt as opposed to costly equity is not doing that. I mean, would you look to change that as well? Almost every infra company that I talk to does think of executing some of the projects through this 80-20 or 70-30 debt equity ratio.
No, sir, no. That won't be possible because we are probably into building construction. We are not into infra. So that is not required for us.
Okay.
Sir, could you give us some visibility on any other projects that you have bid for where you could come out to be the L1 bidder? I mean, the quantum of projects that you're looking to bid at in the near term?
Yeah, actually, for the year 18-19, we declared we projected an infusion of 1,000 crore order. As of now, we have already reached to 802. But there are a few projects which I cannot say where we are bidding now. It is a bit difficult for us to.
I'm sorry, Mr. Sir, we cannot hear you very clearly. Could you just repeat that point?
See, we declared or we promised to the investors that there will be an infusion of new orders of about 1,000 crore this year in March 2018 to 19. Out of that 804, we have already reached. So by March 2019, I'm expecting we should cross 1,000 mark. And regarding the major projects which we have bidded, I cannot speak about the names of the client as of now.
Okay. No, but you would be, sorry, I'm just trying to get an understanding, Mr. Patel. You would be L1 in what quantum of projects? Is there a number? Okay, I think we lost that line. Wanted to also talk about the Surat Diamond Bourse project. It's a large project that they have won, and wonder what's the realizations on that. We'll just try and repatch that line with PSP. But the stock's not quite reacted to that order win as well. Naturally so. I mean, infra companies bag orders left, right, center. But yeah, not quite reacting to this 375 crore order win, this PSP project. But interestingly, debt-free company. One more debt-free company. Yesterday we had Man Infra, almost a debt-free company, save for that small debt that they have. This one to a debt-free company, PSP projects, 394 and counting.
But then, you know, that talks about also whether or not you are in the position to leverage yourself to take forth the growth opportunity at a cheaper cost of funding. So, like you said, I mean, using precious equity versus using debt to propel growth going forward.
Yeah. Well, horses for courses, I don't know. I would guess this would depend on what the company believes. But I think we'll just get in Mr. PSP Patel back on track. Mr. Patel, sorry, we're just trying to understand where are you L1 in? What quantum of orders are you L1 in?
Sir, these are the orders. One is at Pandharpur, near Pune. We have got one yes to lowest for one of the Pradhan Mantri Awas Yojana scheme of 175 crore at Pandharpur. Okay. And the second order is for Ahmedabad Municipal Corporation, where we have to lowest is the resurface and redevelopment of CG Road in Ahmedabad. That is about 35 crore.
Okay.
So what you know, these orders that you're getting, what is the likely realization on them?
New orders?
Yeah.
New orders which we are expecting after this, what we have declared?
Yes.
Yeah, that can be seen. Supposing I am expecting further 400 crore orders to yet come till March 2019, we can expect something like at least 100 crore to come out of that process.
Okay, and what are the IRRs on any of these projects, Mr. Patel? Typical IRR for any of the project?
No, as such there is, we cannot generalize that IR for the...
You can't. Never mind. I just have one final question, Mr. Patel, and that's on this Surat Diamond Bourse. What's the update there? How is the work? What's the realization? And what's the update on the booking for the project?
We have already crossed 300 crore of sales till now, and presently 4,500 people are working, and project is going on full fledged, and all the permits are also clear till October 2018. And we are still expecting the project to be completed on time.
Got that, Mr. Patel. Thanks very much for joining in. Appreciate you taking out the time, and congratulations on that order win there. That's the management at PSP Projects. Like Neeraj highlighted, nothing much is happening on the stock. Yet another company to focus on is BCL Industries. The central government in September hiked the procurement price of ethanol by nearly 25%. This came as a relief for sugar mills grappling with record output of sugar. One such company shifting its focus to ethanol now is BCL Industries. It has converted a part of its Bhatinda unit capacity to ethanol. It has also received a tender to supply about 3.04 crore litres of ethanol from December 1st, 2018 onwards till November 2019. Let's talk about all of this and more with Mr. Rajendra Mittal, the Managing Director of the company. So thanks very much for taking out the time. From a total capacity of about 6.7 crore litres, I believe, you're looking at converting 3 crore litres odd to ethanol production.
Yes, exactly. We have got an installed capacity of 6.6 crore litres for the manufacture of ENA. Now, this almost 50% of the capacity we have converted into ethanol, and the company has already received an LOI from the oil marketing companies to be supplies to commence from the December to 30th November. The rate is quite, rightly mentioned, about 18% higher as compared to the last year ENA realization. So with that, the company will be able to do much better.
All right. So, sir, now if you take a look at the overall spread that you had in terms of the cost versus what you're selling at, for the entire 6.6 when you had ENA capacities versus now when you convert 3 crore liters of that to ethanol? How will that change? How will that spread change, and how will it affect the average income that you have?
I see that the balance about 3.56 crore liters will be manufacturing ENA, and will be fetching a higher price on that ENA also, because every company in the ENA trade has diverted some of their quantity for the manufacture of ethanol, being a very attractive price offered by the oil marketing company.
So got that, sir. I just want to know those numbers. If you could give me, give me a breakup of what the cost would be.
We should be able to mop up an incremental revenue of about 12 to 15% on the overall 6.6 crore liters.
And has the cost of production gone up as well, if indeed the demand for the raw material is so strong?
That is on the very little side, maybe 4 to 5% we have to shell out on the increased price of food grains. But after providing for that, the net incremental margin would be more than 10%.
Okay. Can you just, I'll come back to this and the other expansion plans that you have, Mr. Mittal. But just one quick question. What's the quantum of order win that you've received for ethanol tenders? How much have the...
It's 3.04 crore liters.
Okay. So suffice to say that your entire capacity of ethanol, which you have currently, will be utilized with this order?
Yes, definitely.
Okay. And
at the first year, we have converted 50%, almost 50%. So this quantity will take care of about 56% of our total production of ENA capacity.
Okay. So if you can put that into numbers now, Mr. Mittal, what was the annual revenue and profit from the distillery division until the last year when you didn't have this ethanol benefit? And how would that change in FY19, sir?
I think we'll be able to fetch about 5 rupees per liter extra, and the numbers will not have a real impact in this financial year, but in the next financial year, because the deliveries will commence from December, and we'll be having just 1 quarter for this incremental kind of a revenue. So next year, I think we should be able to mop up more than 25 to 30 crores apart from the usual revenue.
Yeah, so 5 rupees per liter extra, I heard you say, right?
Yes.
Which is on a total quantum of 6 crore liters.
6.6 crore liters.
So that's, you expect that annual revenues without any additional cost will go up by 30 crores. I'm guessing all of that flows into bottom line. Yes,
25 to 30 crores.
What was the reported profit, Mr. Mittal, for FY18?
FY18. Actually, I don't have the exact figures, but I can give you the profit after tax was 18.40 crores last year.
In FY18?
Yes.
Okay, what do you expect it to be in FY19 with that 1 quarter of additional benefit?
You see that we have got 3 variants. It's not only the companies engaged in the manufacture.
Yeah, I'm just talking about the ethanol division right now, sir. Then we'll come to the other businesses as well.
Okay. So I think we should be able to, the percentage of increase will depend on, but I think we'll be able to have 20 to 25 crores of extra, you can say, incremental profit over and above the last year.
And just to put things into perspective, so your profit for this quarter 2 gone by, was 17.2 crores only in this profit. So you're talking about that much more increment in your quarterly numbers as well.
Sir, this profit is not account of ENA oblique ethanol. This profit of this second quarter is higher on the account of the realization from the real estate. So the company has got about 100 crores of under rupees 100 crores worth inventory from its 2 real estate projects. So that monetization has happened in this quarter, and this incremental profit is on account of that.
Okay. Is there a likelihood of you, while you have received orders of this 3 crore liter order,
4 crore liters.
Yeah, 3 crore liter order. Is there a likelihood that there could be more down the line that could come your way? And can you talk about any additional capacities that you're looking to add on, or specifically only to ethanol? I believe there is another a plant in Gorakhpur that you're looking at.
No, you said that there is one expansion. The company we have, this is a subsidiary company of the BCL named Sacchitanand Distilleries Limited. So that plant we are putting up in West Bengal, Kharagpur.
Okay.
So that will have a capacity of 6.6 crore liters. But we will be manufacturing ENA only, because the state of West Bengal is deficient in potable alcohol. And we were feeding some of our clients from our Bathinda plant. Since now we have converted part of it to this ethanol capacity. So for that purpose, we'll be, you can say, commencing the production from September 2019 onwards. And the realization of ENA in the state of West Bengal is much more as compared to the ethanol in the state of Punjab.
So the financials from that will start pouring in post September 2019.
Yes, 1920.
All right, and that's got nothing to do with ethanol. So you're not planning any more ethanol capacity expansion.
As of now, we are not planning, because this is the first year the government has come out with this biofuel policy from these damaged food grains. So this year we have converted 50% of the capacity. Let's have the experience and the other things, and then we'll plan the capacity after completing our Kharagpur project.
Okay. How much? Do you have the environmental clearance for the Kharagpur plant? And
yes. Every clearance is
received.
CLU, environmental clearance are in place. The construction has already started, and we have tied up with PNB for a term loan of 90 crores. The total project outlay is about 137 crores.
Okay, and how are you funding the same? Sorry, I heard you mention PNB. So is it?
Yes, PNB sanctioned a term loan of 90 crores, and rest, the 47 crores will be from the 51% from the BCL and 49% from a local partner in West Bengal.
So this is not a 100% owned plant of BCL?
No, it's not 100%. It is a subsidiary owning 51% of the equity.
Okay, it's a subsidiary owning 51%. Okay, and just one quick question. What is the consolidated debt, Mr. Mittal, and how do you plan to reduce that, if you plan to reduce that?
So the total consolidated debt on the company as on date is about 200 crores.
400 crores? 200 crores, okay.
Yes. And in the company books, we have got an inventory of about 100 crores of real estate, which is ready to move. So we are monetizing that, and in this first half, we have already got about 27 crores from that real estate. So we hope to monetize about in 3 years' time the entire 100 crores, put back into the books, and will be able to reduce the entire amount will be used to reduce the debt in the books only.
So now, how much? You said in 3 years' time you will bring down the debt from 200 crores?
Yes.
2 years. From 200 crores to 100 crores?
No. You say that within 3 years we will be able to monetize the entire 100 crores. So the debt will come down to 100 crores in 3 years.
At the end of 3 years?
Yes.
Okay. Just one final question then, Mr. Mittal, from my end at least. If FY19 adds 1 quarter of ethanol revenues and profits, FY20 will probably be the year wherein you see full year of ethanol revenues as well as additional revenues from the ENA division in Kharagpur, right?
Exactly. No. In the Kharagpur, I think it will be 1922 quarters will be there. So,
yeah. Which is half a year.
Half a year, yes. Sure.
Right. And so just to follow up on that, so even for Kharagpur, when we're talking about the second half of FY19, the calendar year FY19, the realizations will have the same spread?
Sorry?
The realizations will have the same spread?
Oh, yes, it will have the same spread, because the West Bengal is quite deficient in this potable alcohol. Will be able to realize much more.
Okay, got that, sir. Thanks so much, Mr. Mittal. Really appreciate you answering all of those questions.
Thank you.
And best of luck on the fulfillment of that ethanol order. All right, that's management at BCL Industries, Mr. Rajendra Mittal. The stock, though not doing a whole lot much. Small company, 110 odd rupees on the counter, but nonetheless a big opportunity in the pipeline. And if you go to see if they follow what they've said they will, then it's going to be a really big year for them next year, particularly. Let's talk a little bit more about some other spaces then, and the oil and gas space. GAIL India, for one, is the top gainer on the Nifty. Goldman Sachs has upgraded the counter to a buy and also raised its price target by a substantial sum. The other stock in focus is Bajaj Finance, where HSBC has initiated coverage. Yatin Mota is here to take us through the rationale behind both these views. Yatin, over to you.
Afternoon, Devina, and we'll start off with GAIL and a big upgrade coming in from Goldman Sachs. In fact, they have upgraded the stock to buy and, from earlier rating of neutral. And more importantly, the target price is now set at a level of 490 rupees per share versus the previous target price of 260. They believe that in the oil and gas space, whatever stocks they covered, GAIL is expected to see one of the strongest earnings growth. In fact, they are pricing in the core transmission business valuation at close to 4.5 times, current financial year FY19 on a EV/EBITDA basis. Also, they expect that the $40 billion investment which is happening in the gas sector would probably, aid the overall, investment rationale for GAIL India. Apart from that, we have HSBC, which has initiated a coverage on Bajaj Finance. The target price is with a buy rating. The target price is set at 3,000 rupees a piece. More importantly, they believe that a 37% earnings CAGR is possible till FY21. And more importantly, they expect the return of equity to bounce back sharply. In fact, they are expecting a ROE of 23% for financial year 21. So clearly, on the back of strong earning growth and robust return on equity, we have HSBC having a bullish stance on Bajaj Finance when it comes to the initiating report.
Right, Yatin, thanks very much for that. So that's two stocks to keep an eye out for on the back of those brokerage views that have come in. GAIL, though not having a very great month, or even the last 7 days have not been all that good, but looks like it's turned around the corner, at least in today's session, but the markets are down by about 1% The Nifty is at 10,663. We've got the banks losing 200 odd points, and the bank Nifty 26,100 there. Let's bring in Sacchitanand, Uttekar, as well as Brijesh Singh. They're joining in right now with their views on the show on the technical side. Gentlemen, good afternoon to you. Let's talk about some levels and how does one position for trade now. Sacchitanand, I'll start with you on the Nifty first.
Well, good afternoon. In fact, what we have seen today is slightly a bit of profit booking, after achieving the levels close to around 10,800. If you look at the overall stance, I think the Nifty has been trending up, and this is the first time wherein previous day's swing low has been breached and the Nifty has been trading below it. But if you look at the entire sequence, the 5-day moving average has acted as a very good support, and even right now, Nifty has just retested that. So probably, what we are looking at is some kind of a consolidation pattern to occur out here. On the lower side, 10,650, which was the breakout point for the previous consolidation, could act as a support from here on. But even on the higher side, 10,770, 10,800 could act as an immediate hurdle. So probably we may see a couple of trading sessions within this particular band. So with that intention, since we are closing on to the lower end of this particular range, a buy call can be initiated in Nifty. What we are expecting is that this oscillation could continue. A stop loss on the spot level should be kept at around 10,620. Longs should be initiated for a pullback towards 10,710.
All right, that's on the index there. Let's talk about some specific stock ideas as well, Sacchitanand, and what you like in today's market is an HUL, and you want to sell Equitas.
Well, that's right. If you look at the overall performance of HUL or most of the FMCG companies, they have been very steady. HUL per se, for the last couple of trading sessions, it has been consolidating. On the daily scale, what we are witnessing is a rising 3 formation, which is again a continuation pattern on the candlestick front. This particular pattern now looks very mature. A stop loss can be placed at around 1680 and long positions should be added. We are expecting recovery back to around 1740 levels. So from a trading perspective, this can be on the long side. On the short side, a very similar formation, but the consolidation in Equitas, is a bit on, looks like a symmetrical formation. A breakdown level is somewhere close to 108, and that's why we are recommending that one can create fresh short positions here. 102 is the target that we are looking at on the futures. Stop loss should be placed at around 111.
Okay. Brijesh Singh of StockAxis with us on the show as well. Brijesh, how are you approaching trade today as we speak? You're trading 1% lower at the lowest point of the day.
Good afternoon, Neeraj. No doubt Nifty, after making a high of 10,770 plus, and after that we have seen a profit booking. But the plus point was been that the Nifty, after trading in was trading in the range of 10,450 or say 10,500, and on the highest at 10,660 was been acting as a resistance. So we have broken that resistance, and now small profit booking can't be overruled. But that doesn't mean the trend on the higher side has been over, because on a shorter term time frame, I'm talking about hourly as well as the 4 hourly chart time frame, still the pattern is higher bottom formation has been there, so which is still indicates the buy on dip strategy. So I'm looking Nifty, if it trades taking a spot value, if trades somewhere around 10,660 or below that, one can take a buy call with the stop loss of 10,620 and look for the target of again 10,770 zone.
Okay. It's not the bank Nifty which is quite leading down the markets, while it is down about 1% too, but a bunch of other stocks which have corrected quite strongly today. Nifty ITs looked pretty weak today. Brijesh, anything before we get to your stock recommendations? Any thoughts on the large cap IT names?
See, as we have said, the profit booking would be there. So whether that be in IT or a metal stocks or a banking stocks, but specifically if you're talking about the IT counters, Infosys, if I talk about, so 620, 625 is a support. Right now it has been quoting at 640. So if it comes somewhere around that on the buying range of 620, 625, definitely one can take a buy call with a stop loss of 600 and look for the target of again 660 plus. On a weaker side, if it is been concerned, Mindtree little bit looks weak. Right now it's been quoting at 835 or 840 zone. So till it's not able to cross 875 on a closing basis, one can go for a sell side here with the stop loss of 875 and look for the target downside 800 and below. Okay,
let's talk about specific stocks. And Brijesh, let me stick to you and let me get your stock ideas out of the way first.
So yeah, my both the calls are on the buy side. The first counter would be BEML. The stocks on the, as I said, on the shorter term time frame of the chart has been had moved up with the volume has been increased. Higher bottom formation has been there. So somewhere around 750, 755, one can take a buy call with the stop loss of 720. Look for the target of 800. This I'm looking for in a 3 to 4 trading session. Another counter would be Bharat Financial. The stock had seen a massive profit booking from 1230 and to the level of 820, and after that again now it has shooted up with the increase in volume, so it has been quoting somewhere around 970 zone. So one can take a buy call, or any dip can be used for a buying purpose with the stop loss of 940 and play for the target of 1020. Again, for the time frame for this call would be 3 to 4 trading session.
Got that. Gentlemen, just stay on with us. We've got lots more to talk about. But in the meantime, let's go across to Sharad. He's joining in right now with the buzzing stocks, 3 buzzing stocks that he gets as always. Sharad, what have you got today?
Good afternoon, Devina. The first stock which I have picked up is Hindalco Industries, which has gone down by almost 5%, which is the lowest in 3 weeks. This has been there because of the Care Ratings report, which has shown the refined copper output, which will fall by around 16% in the financial year 2019. So basically, if you get the figure right, the anticipation of the copper output will fall to around 331,000 million ton from the existing 510,000 million ton. Apart from this, the main reason for this is the planned maintenance shutdown of Hindalco and Hindustan Copper's plant, which will be adding to the shortfall from Vedanta's smelter closure. The second stock I have picked up is ITI, which is up by 12%, giving the single most day gain since August 30. The volumes have surged past 10 times its 20-day moving average. Recently, the Press Information Bureau had reported that 3 state-owned telecom companies will purchase around 30% of their equipment orders from the company itself. However, the official communication from CCEA remains awaited. The third stock which I have picked up is Dipan Housing Finance, which has fallen almost by around 3%. Its lowest in 5 days. The results will be announced tomorrow, and this company has been engulfed in the liquidity crisis. So the key things to watch out for will be the commercial paper redemptions and securitizations, and also the rating agencies remain cautious. Back to you.
Oh, thanks. So 2 or 3 names out there which are looking reasonably okay. It's just that kind of a day wherein we don't have, while the large cap space has a lot of action, the mid cap space, at least on the gaining side, has hardly any kind of action. I mean, very few winners in the session today, but for Page Industries. And it's interesting that we spoke about it just a couple of days ago, but how the stock had fallen to 52 times. And from there, the last two sessions has had a bit of a pullback move. Whether it lasts or not remains to be seen, but it's interesting that it's happening across the board, across the spectrum of consumer-facing names, which correct meaningfully only to bounce back. So Page is one today, but we've seen what's happened with Aisha, we've seen what's happened with Maruti as well, and maybe with Titan and a few others too. A sharp pullback, and then a bit of a bounce that has happened over the last
Singh has gone
few
back
days.
to 57 times,
Which
57 and a half, Page.
Yeah, so with that 8%, 10% move, yeah, which should be around that time. But hey, let's see for how long does this growth trajectory of 20% last. But the interesting bit is, one is the fundamental view. Page is normally not traded, but the last couple of days the bounce is strong. So just before we get in our fundamental guest on board, maybe a quick chart check out here on Page Industries. Sacchitanand, would you trade Page at all?
Well, the recovery is good. In fact, since last two trading sessions, we have seen a good jump from the lower levels of around 25,000. I think there is some headroom which is still open. I think 28,400 should be a level which could be achieved, which is the 20-day moving average. And if you look at the way it has surpassed and sustained above its previous days high, probably a stop loss can be placed somewhere close to that. So on a closing basis, 26,980 should be a stop loss, and probably some longs can be added just with an expectation of an extended bounce back.
Okay. Just stay on with us, gentlemen. Getting in one more market voice then. Dipan Mehta, member of BSE, is joining us on the show right now. Dipan, thanks very much for taking out the time. Appreciate it. Let's take a look at your market opinion and the positioning that you have currently. What does one do? Deploy fresh money, wait on the sidelines? We had one major event of the RBI board meet, which is now out of the way. We have state elections to watch out for. We have the G20 summit at the end of the month to watch out for. So, the calendar is pretty packed in terms of events. But does that stop one from taking positions?
See, I think it depends upon the investor's position of cash in the market, or how much exposure he or she has got to equities. And if you have a fairly low exposure to equities, then maybe this is a good market to buy into the dips and gradually increase your exposure to equity, leaving enough ammunition to buy whenever there is a dip post any adverse election outcome, which could be there in the first week of December, and then maybe some more ammunition towards May also, when the general elections results will be out. So one needs to just space out the purchases, provided there is adequate cash still available for investing, or incremental savings one wishes to deploy in the equity market. As far as investors who are fully invested, I think it's a good time to try and improve the quality of the portfolio and get out from the stocks where the growth is appearing to be a bit challenging, or there are other structural issues, and get into stocks which have been beaten down, yet have good scope for appreciation because of underlying growth dynamics. So it's a good time to reshuffle the portfolio if you're more or less fully invested, and a good time to start looking at buying at dips if you have adequate cash flows at this point, as well as going into the future.
So when you talk about portfolio shuffling, where would you give more weightage in terms of what has a higher weightage to remain in your portfolio versus being pushed out?
See, we've always been very positive on banks, private sector banks and NBFCs, and we've seen a serious correction in that space, not only just in NBFCs, but quality private sector banks, the likes of, say, IndusInd, which has corrected significantly, and also the other NBFCs like, say, Bajaj Finance or L&T Finance or M&M Finance or Chola, which are all part of large business houses, and to that extent should not face a liquidity issue going forward. And their stock prices have corrected significantly from their highs. So these are good entry points for these businesses which remain in a structural growth momentum. And even 2-3 years from now, they would continue to grow at high double digits. So this is a good time to buy into those sort of stocks. Again, we're very positive on consumer-oriented businesses, especially maybe something like a media and entertainment. I thought most media companies came out with a good set of earnings in the September quarter, like likes of Z Media or Z Entertainment, even TV18 for that matter. So I think those businesses also deserve investors, to look at them and invest in those companies. And then other larger consumption-oriented plays, including FMCG, appliances, building material, I think all are looking pretty decent at this point of time. So our preference is more for the financials and the domestic consumption-oriented businesses. We would like to avoid pharmaceuticals, except those companies engage in contract manufacturing, and also like to broadly avoid software companies, except maybe a large cap like a TCS, which has been a pure outperformer, or then product companies or companies which have a slightly differentiated business model, the likes of say Tata Elxsi or Larsen & Toubro Technical Technology Services. So it has to be selective as far as pharma and IT is concerned, and preference for good quality businesses as far as consumption oriented themes and banks and NBFCs are concerned.
Dipan, good afternoon, Neeraj here. Just wondering, the common conversation and a lot of South Bombay grey-haired gatherings that I go to, and all those people with wisdom say that we are looking at companies that have fallen quite a bit because there will be a bounce. And a name like Yes Bank features prominently, a name like Maruti at 6,500 features prominently in that list. Now, fundamentally, would you give credence to these companies because they have lasted, they have issues which are temporary in nature, not necessarily permanent in nature? Would you give credence to building a small portion of your portfolio that way?
See, I think in Yes Bank, my answer would be to just hold off for a while. There's just far too much uncertainty surrounding the stock, and depending upon who the new CEO is going to be, and then give him a couple of quarters to understand the business, and hopefully there are no skeletons in the cupboard, then I think one could look at Yes Bank post all those uncertainties are over and done with, and maybe by then the stock would have gone up by 25-30% or so, but so be it. I think the risk reward will be much more favorable once the uncertainties are out of the way, even if the stock has appreciated, because underlying business, underlying momentum remains very strong. It's a great organization, very strong mid to senior level HR base over there, and again well positioned in the kind of businesses which are growing pretty well, as retail lending, and they've got great success as far as improving their current account and saving account balances are concerned. So I think it's a great business. It's just that we need to get over this uncertainty surrounding top leadership and the constitution of the board, and then maybe look at buying into the stock. When it comes to Maruti and Eicher and some of the other auto stocks which have corrected, I think that at some point they may become good investment opportunities. It's just that maybe a few more months appear to be a bit challenging for them, considering that monthly volume growths may not be appealing given the base effect, given the slight kind of slowdown which we have seen in consumer spending. But these businesses can be tracked very easily from the monthly flows or monthly sales which come from time to time. And whenever you see a decent uptick taking place in the automobile industry, the OEMs especially, then one could jump into the bandwagon over there, because intrinsically these are strong businesses, again secular growth stories over here. And once they have the volumes going, then we've seen very decent operating leverages also come into play, which results in higher operating profit margins, and a lot of auto companies are moving up the value chain, so they're benefiting from premiumization. So many positive, I would say, tailwinds for the auto industry. Just one major headwind, that being the kind of resistance on the part of the consumers could be temporary for at least increasing and taking a larger number of purchasing higher number of automobiles or two-wheelers for that matter.
It's very interesting because today that conversation with FADA seemed to suggest that because of the way the inventory levels are, the volume growth at the wholesale level could get impacted in the months to come.
Because they won't place new orders.
Yeah, and unless they said that, unless something gets done. But irrespective of that, I mean, or as and when that happens is a separate thing. But volume growth numbers, which thus far have looked okay, could come under a bit of stress as well. And therefore, I think Dipan's point is well taken that there could be some temporary issues for Maruti Suzuki as well, even though it's a tried and tested model. But who knows?
And also if this prolongs, like he said, the problem is going to be that a customer who goes back to these dealerships will not want a car which has been sitting there for that much amount of time. There has to be some amount, something that has to be done at an OEM level as well as from the company side to make sure that the stock that goes out is also not too dated.
Actually, for car buyers, December could turn out to be a great month because there could be discounts galore, to be honest, if indeed these inventory levels are going to last. So let's wait and watch. Dipan, in that same vein, would you club the two-wheelers as well? Because while the volumes thus far have looked okay, the commentary from the two-wheeler financiers seems to suggest that the slowdown is not quite imminent. But today, I think FADA's comments seem to suggest that even two-wheelers have some issues. So what do you do with a Hero or a Bajaj Auto or a TVS Motors?
In the two-wheelers, we are more selective, and we do feel that Eicher Motors and TVS Motors may outperform Bajaj and Hero MotoCorp, and I'm talking from a long-term perspective, like 3 to 5 years or so. So we are positive on those two companies in the two-wheeler segment, and within the passenger vehicle, the top pick remains Maruti. So I think between Maruti, Eicher and TVS Motors, you're more or less done with the auto OEM companies. More than that would kind of result in overweight within that sector, which is not desirable. And then one could look at auto ancillary businesses as well, the likes of say Minda Industries or Minda Corporation or even Motherson Sumi for that matter. I know it's been a big disappointment, but I think if you give the company maybe 4 to 6 more quarters, they could again go back on that fierce growth which we have seen in the past. And as far as Minda Industries, Minda Corp are concerned, they've got good growth dynamics, mergers of JV companies also adding to the incrementally to the bottom line. So I think that a combination of OEMs and auto ancillary would make a good outperforming segment within the portfolio.
I'll come to you with Jet Airways, Dipan, but in the meantime, let me just go get some chart checks on the same. Let me start off first with you, Sacchitanand, on a Jet Airways at 310. The initial euphoria of the Tata Sons interest is sort of fizzled out now, and the stocks come back down to about 310 from about 350 that it had hit in the excitement. What would you do? What sort of trades would you take?
Well, honestly, it is in a no-trade zone right now. Even the day before yesterday, when we saw the stock, climbing towards the 366, 360 zone, that entire move lacked open interest. And if you look at even the volumes follow-up, it has been drying out. So probably, we may see this stock consolidating here. A decline towards 285, 290 should be witnessed in the next couple of trading sessions. But we are not really interested in any particular long or short positions. Probably the stock may get into more of a consolidation phase. 290 on the lower side and 330, 345 could act as a resistance. So probably there could be a broad-based range which could develop from here on for Jet Airways.
Got that. Dipan, on Jet Airways, the prospect of Tata Sons coming in really raised the excitement levels of investors. The stock shot up to levels of more than 350, now back down to 310. Nonetheless, very preliminary talks as per Tata Sons. What would you do with this one?
It's a difficult one to answer. I mean, the stock has rallied the way it has. For an existing investor, it's best to remain invested and hope that some positive news flow comes and the company is acquired by a strong player. It could be Tata Sons or it could be any international airline as well. Because intrinsically the business is sound and viable. It's just that it needs significant infusion of capital, improve the balance sheet quality, get about somewhat of efficiencies as far as the costs are concerned. Because the business per se, volume growth are still remaining pretty strong at 20% or so. And gradually you will see pricing discipline coming back into the sector, which will be beneficial to all the airline players. And with the threat of oil prices at least reducing for the time being, we may see good tidings coming in for the entire airline business. So I would say that existing investors could remain invested. New investors, I think, should just hold off for a while and look for buying again back at the 300 levels or so if for some reason the stock were to come over there. And maybe if the Tata deal is actually taking place and we have more clarity about the ownership and the revival plan, then one could look at getting into Jet Airways, and again stock price would have rallied by then because of the news, but then the risk reward ratio would be far more favorable, considering that the uncertainties around the future of the airline would have been more or less well addressed.
Okay. Dipan, really appreciate you taking the time out and being with us. It's been a while, but good having you today. Thanks much for joining us.
Thank you.
That's Dipan Mehta with his thoughts on specific pockets within the markets. Let's take a small detour. Strong growth in premium fans and a demand revival in the cables and switchgear segment were some of the key highlights in the electrical space during the quarter gone by. Investec has come out of the report and they have retained a bullish stance on most of the electrical companies. Let's discuss this report in some detail with Aditya Bhartiya. He's research analyst at Investec Capital Services, joins us right now on the show. Aditya, good having you. Thanks so much for joining in. Key takeaways from Q2 earnings, because we've seen Kerala flood impact sales, but despite that, there was a demand revival in cables and switchgears by and large, and I think the fan space showed some decent growth. What has stood out for you?
Hi Neeraj, good afternoon. This has been a fairly interesting quarter. We have seen growth reviving in the last 2 quarters, which wasn't really the case in FY18. We have seen, as you rightly mentioned, premium fans growing at a fairly brisk pace. We have also seen some of the cyclical segments like switchgears and cables picking up. And even on the lighting side, with the exclusion of EESL, overall revenue growth has been pretty robust and the momentum has sustained. What has been interesting is that this revenue growth hasn't been constant for all the companies. There have been companies like Havells and Bajaj Electricals which have grown at a much faster pace, while there have been companies like Finolex Cables or V-Guard which have got impacted partly by Kerala floods and partly by some other issues. Even on Crompton Consumer, we have seen revenue growth lagging that of Havells, which has been the trend for the last few quarters as well.
Aditya, you've taken a call on Havells. I mean, you're talking about how the company is likely to outpace the industry and that robust segmental growth is going to aid it. Just in comparison with some of its peers, why exactly do you think it'll stand out, and what kind of financials do you attribute to it?
Havells has been one of the very few companies which has been successfully expanding its addressable market by entering into new product categories. And that is what makes the company so exciting. Even now, if you look at it, the company is entering into grooming products, into air purifiers, water purifiers, setting up its B2B business. And all this essentially means that the company can continue outpacing the industry over the next couple of years as well. In terms of revenue growth, we are looking for around 15% revenue growth for the company over the next few years. And given that the business is not run on pricing, and given all the inherent strengths that the brand and distribution model bring along with it, we think even margins can sustain at current levels. So we are building in around 15-18% earnings growth on an annual basis, assuming that construction market remains where it is. If we see a pickup or a revival in construction market, growth can actually be stronger than that.
Aditya, so is this an assumption for CAGR growth for the next 2-3 years, or in this space you taking it as time goes? I mean, that you're giving a call only for a year because the space may be highly, maybe in a state of flux, so to say.
This is actually CAGR expectations over the next 2 to 3 years. And as I pointed out, if we see a pickup in construction cycle, then growth can actually be even stronger than that. This assumption is based on overall cyclical cycle and overall construction cycle remaining where it is, and slight market share movement happening from unorganized sector to organized sector, which is something that we have started seeing over the last couple of quarters as well.
Interesting. Okay, let's talk about Finolex Cables. It kind of fits in the category, Aditya, of always the bridesmaid, never the bride quite, because it doesn't get the kind of premium valuations that some of its peers gets. You have stiff upside targets on this one. By stiff, I mean 30%, which in a scenario like this is not bad. What is it about Finolex Cables that you like quite a lot? And again, what is the key risk to that call, aside of course, what could happen to industrial activity, which remains an overhang for almost all the companies in this pocket?
So Finolex Cable operates in a seemingly commoditized market of wires and cables. I say seemingly commoditized because that's the perception that one gets when one speaks about wires and cables, that this will be a category wherein there will be no pricing power, wherein every company would be having a product offering very similar to each other. However, I really don't think that is the case. Even in this kind of a category, the company is able to command almost an 8% pricing premium over some of the largest competitors in the market. Even in this category, the company is able to operate with very low working capital requirements, which in turn means that return ratios are very good and cash flow conversion is very high. So those are the things which actually make us excited about this story. Even the way the business is being managed, run by a fairly pragmatic management team, which is always concentrated on ensuring that cash collection is good, as opposed to just chasing the top line. Even that's something that really stands out with this company. In terms of risk, I think so far what we have seen with Finolex Cables is that it has done exceedingly well in the wires and cable segment, but we haven't really seen the company replicating that success in new product categories, something like companies like Havells and V-Guard have managed to achieve. So that remains a risk. It may or may not play out, and only time will tell where it goes.
Aditya, just want to bring in one more element. Obviously, a non-listed company, but nonetheless big in this space. Polycab, that's one of their major competitors within this space. Is that a very big competitive risk for some of these players?
See, even Polycab has been there in the market for last several years. They've done well, they've gained market share. And Finolex has kind of competed with them in different areas. There are regions wherein Finolex is stronger, there are regions where Polycab is stronger. And I think overall electrical market, if you'll kind of plot, in every sub-segment you can list down 3 or 4 fairly large companies. And as long as they don't lose the sight of maintaining their control over the distribution channel and continuously advertising and building a brand, I think all of them will do well.
So how does CNG consume?
Even with Finolex Cables, if you look at it...
Right, go ahead. Sorry, make your point.
So even if you look at Finolex Cables for that matter, in wires and cables, I think this would be possibly the company with lowest working capital requirement and with possibly the highest pricing power.
Okay, got that. The other one that you've given a call on is CNG Consumer. You held your rating and you've cut your target price from 270 to 245. What are the risks that you see here?
Crompton Consumer, again, a fairly interesting company, but how it has been kind of different from Havells is that unlike Havells or V-Guard, the company hasn't so far expanded its product offerings. It has stuck its guns with products wherein it has been dominant, wherein it continues to do well. But even in those product categories, growth has been somewhat slower than, let's say, that of Havells. This is on account of a couple of reasons. First is that Havells is having a more premium offering, while Crompton is there in all categories. And the maximum growth that we are seeing is in the premium category, which automatically means that guys like Havells are growing at a faster pace. The second bit is that Crompton is making a lot of changes to its distribution model. It is following go-to-market strategy wherein it's trying to reduce reliance with wholesalers and trying to go deeper into the distribution channel, establishing a direct contact with the dealers and retailers. Whenever there is a disruption in the distribution channel, we have seen revenue growth suffering a bit. And I think that could continue panning out over the next few quarters as well. Even in the last few quarters, we have seen Crompton's revenue growth being somewhat slower than some of the well-managed incumbents. And I think the same trend is likely to continue over the next few quarters.
All right, great to hear from you, Aditya. Appreciate you taking out the time. That's a quick view that's coming in on the electrical space within India, specifically stock like Havells, Finolex Cables, V-Guard, Crompton Greaves Consumer, and the call thereof. Havells, though, today is down in the session, so are most of the other names. Time for a very short break here on Countdown. On the other side, we'll get you the list of Fab 4 stocks of the day, and at 3:15, we'll tell you what dealing rooms are recommending.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back on Countdown right here on Bloomberg Quint. 28 minutes left for the markets to shut shop, and we're looking at a level of about 10,650 odd for the Nifty. Bring up the world markets and see what they are doing in the session today. Europe and the Dow futures should also come up on your screen. It was a bad day for the Dow futures in trade, or the US markets yesterday. For now, Europe is not having the greatest of days, so in line with what the European markets are doing as well, and Dow futures signaling a further downtick of 165 odd points. So the world markets are certainly not supportive. I just want to bring up the currency ones before we go back to the Fab 4 list of stocks and find out what's made it to Darshan's list. But this is the rupee at 71.46. This is that one indicator which is lasting well. Okay, time now to figure out what's made it to the Fab 4 list of the day today. Darshan is here with that. Darshan, good afternoon.
Good afternoon, Neeraj. So basically the market's not doing extremely well. So even a stock like Colgate, which is managing to hold on for itself, you can consider it to be a Fab 4 stock given the fact that the carnage is there in the market. Credit Suisse came out with a note today in which they were bullish on Colgate with a target price of 1375. They're saying that they're doing well. Volume growth has clearly been seen. Some of the new products that they've launched is doing well, and you know, the issue of competition and price price decline is behind them, so they are bullish on it. Aarti Industries, no doubt, one of the very few stocks that you see on your list which are at a 52-week high or a lifetime high. Aarti Industries has been doing well for itself over the past few days. It's one of the very few stocks that are trading at record highs. Just Dial today, no doubt it's up 4%, but I was really surprised at the open interest build-up that the counter did manage to pull up. It was almost a more than 30% open interest build-up on the long side on Just Dial, so there's definitely something cooking there. And HEG has managed to inch up 3%. They've said that the board will consider a buyback. No doubt, they are a debt-free company, cash-rich company, and with the free cash flows that they've been generating because of the numbers and the prices that we've seen, a buyback is something that they will consider. But more details will come in only later. But these are the 4 stocks that that are buzzing in trade today.
All right, I think the board meet happens 26th of November there. Thanks a lot, Darshan. Those are the list of Fab 4 stocks. Some more stocks, and rather not mainly stock specific, probably focus a little bit more on commodities and flavor of metal stocks which have wavered through majority of 2018. Nickel in particular, however, has been one metal that has failed to post any green tick no matter what the time frame. So much so that it may be headed for the longest losing streak if it ends in the red for the month of November. Agam Vakil is here to run us through the details. Agam.
Right, so, well, LME Nickel is set to equal its longest monthly losing streak in November. The last time LME Nickel declined for 6 consecutive months was between October 2015 and March 2016. Considering data available on Bloomberg for the last 20 years, LME Nickel has not registered a longer losing streak than in the period. And LME Nickel index has corrected as much as 30% from its high that's in June 2018, where prices have come down due to oversupply concerns after Philippines, which is the world's second largest supplier, is expected to reopen some of its mining operations. LME Nickel has declined in the last 1 month, the last 3 months, as well as the last 6 months, and it is one of the weaker metals overall on the LME exchange.
Got that, Agam. Thanks very much. In fact, nothing much happening on aluminium and copper as well. So the LME's 3-month aluminium contract year to date has been down 15%. The LME 3-month copper contract has been down 13.5%. So base metals as a whole looking a bit extremely weak over the last 1 year or so. But let's bring in Chokkalingam of Equinomics Research. He's joining us on the show right now. Chokka, thanks very much for taking out the time. Not just the underlying, but even stocks with regards to metals have seen quite a steep correction right now. So be it the likes of a Hindalco, Nalco, these are the kind of names that have seen heavy cuts coming in. So anything that's commodities related is seeing a knock in trade today. And what's the sense and how does one play it?
Yeah, ever since the trade war started, the metal space started correcting substantially, as you rightly now presented some data points. I believe that the correction is not yet over in the metal space, because last week we have seen growth contracting in Japan, Germany, in fact in the entire Eurozone. Even US GDP growth is revised downward for Q4. So these developments would be certainly negative for metal prices. I think it is too early to do any bargain buy. The entire commodity space, one can look at a stock like a Coal India, because coal prices are quite strong, and its output is also expected to go up substantially. And also the users of oil one can consider rather than the producers of commodity like oil or metal. So there are a host of companies which are going to benefit out of the recent 23% fall in the oil. So that is where we are focusing right now.
All right. Brijesh Singh, some of the OMCs for you?
See, Devina, if we talk about the OMC stocks right now, which looks good on the chart, nothing much has been there, but only a few stocks which looks from OMC. We can take GAIL right now. It's been moving up. 343 has been quoting. So if someone wants to do a BTST to 343 or say somewhere around 341 can take a buy call with the stop loss of 336 and look for the target of 350, 352. But overall, OMC right now I would be avoiding.
Avoiding OMCs in today's session. Mr. Chokkalingam, the fall that we've seen in some of these commodity names today, would you expect that to continue? And fundamentally, if you look at the large cap commodity names, be it ferrous, non-ferrous, where do you find favor?
Yeah, maybe, if one has to look at the commodity space, then the only one stock I would recommend is Hindustan Zinc. Even the zinc prices are down on year-on-year basis substantially. But Hindustan Zinc still, after giving 2 special dividends, still sitting on a lot of cash. And also the expansion project is to some extent compensating for erosion in the realization. And third, with around a 12-13% rupee depreciation, the domestic zinc prices relatively better off as compared to other prices. So therefore, this is the one stock I would recommend within the entire metal space.
Okay. So that's on the large cap commodity names and the ones which are reacting today. Mr. Chokkalingam, just one more question, and that is on GAIL. After some days of a correction, there is some bounce today, arguably because of a brokerage note. Are you a buyer here?
No, I've been quite bullish on many PSU stocks, but the very recent time I've been going slow in accumulating because, you saw also some report that GAIL is likely to buy wind energy assets of IL&FS. So what I'm trying to say is that because of the pressure on the non-tax revenues, some of the cash which are very strong PSUs could be used to ease the fiscal condition of the government. We also saw media report of proposed merger of REC with the PFC. So a lot of things are going on, so therefore I would not like to go any fresh purchase of PSU stocks at this point in time till the election is over.
Okay, stay on, gentlemen. Let's hear out from one more market voice. Predicting the trajectory of crude prices is difficult, is what Sanjeev Prasad of Kotak Institutional Equities told us in a chat a little while earlier today. He pointed out that the other outcome that could throttle in markets is elections. Let's hear out what was his view in starting off with his views on the rupee.
If you look at the fair valuation of the currency on a 36 currency RER basis, then it looks like somewhere about low 70s is a good fair value for the currency, even though technically the RBI's 36 currency RER number is showing more like 110. That may not be entirely correct because that is based on the base of something like 2004. So I don't know whether that is really valid as of now. So I sort of take look at more recent numbers, and based on that, it looks like it is a reasonably fair zone as of now. Low 70s, I think, is fine for the currency. Coming to the second point of RBI and the speculation in the press about the issues between the government of India and the RBI. Yeah, you are right in the sense that we haven't seen any real announcement as of now. Yes, the RBI and the government have announced certain joint committees to look at certain issues with respect to the PCA framework for the PSU banks, the issue of capital reserves of the RBI, and so on and so forth. So hopefully over the next few weeks we will get some more clarity on this. But you're right, at least the sense of in a way struggle which seemed to be there between the two and the tension which were there, that seems to have, at least for the moment, dissipated.
Sanjeev, as somebody sitting outside India, if you take an investment call on India and you had a checklist for yourself with regards to the positives and the negatives, what would overweigh? Would the positives overweigh the negatives, or would it be vice versa?
First of all, I only sit outside India physically. All my work is confined to India, so I'm not really an outsider in that sense. But see, the top-down view of India has dramatically improved, I would say, over the last few weeks, just based on lower oil prices. And as I was saying earlier, all the three macroeconomic parameters look certainly a lot more stronger. So at least the top-down investment case has improved quite nicely. If you look at top-down market valuation, is still slightly on the higher side. It's roughly about 20 times on March 19 basis on a Nifty free float basis, about 16 times on March 20 basis. So it doesn't look too bad on March 20, I would say, but of course that is predicated on something like 26% earnings growth in March 20. Whether that will come through or not, we'll have to wait and see. So I think on a standalone basis itself, India doesn't look too bad, I would say. Of course, valuations are still on the higher side, but I'm okay with it because in some pockets of the market, valuations are quite attractive, I would say. Now coming to the global bit, and that's where you still have some overhang, I would say. First of all, on oil itself, I don't know whether this is a temporary relief or, oil prices again go back after 180 days. It's hard to say because as of now, the exemption which has been given by the US is only valid for 180 days. And what happens in early May when, this exemption period goes away, we'll have to wait and see. The risk we run is if the OPEC plus, including Russia, decides to cut oil production, you could see again a spike in oil prices. So that's something to keep in mind. I'm just hoping that over the next 6 months, the oil prices remain where they are, and hopefully the elections go smoothly. So there is no really, oil doesn't become an election issue. Let me put it that way. Then coming to the whole US-China issue, there are issues still over there. China is slowing down. Looks like, and on top of that you have this US-China trade issue which is clearly not resolved. If anything, looking at the tensions between the leaders who were there at the APEC summit recently, it doesn't look like we have made any progress over there. So that issue is still outstanding. And lastly, we still have the election hump to go through in India. You have 5 state elections. Results will be available on December 11th. 3 are pretty critical from market perspective. So if you see an outcome which favors the BJP, the market could possibly see a little bit of a relief rally. If you see an outcome which makes the market worried about the chances of BJP forming the next government, you could actually see a correction in the market. So most people seem to be of the view as of now that the BJP will lose Rajasthan and retain power in Chhattisgarh and Madhya Pradesh. So if it is on expected lines, I don't see much of impact on the market. But if the BJP loses, let's say, Madhya Pradesh on top of Rajasthan, the market will definitely develop cold feet in terms of, the chances of BJP forming the next government. Obviously, it's early days, so we'll see how things pan out. So December 11th, important day, I guess, for the Indian market.
All right, an important market opinion there that's coming in. But time now to take a look at what our dealing rooms recommending. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, gentlemen. Let's start off with you, Yatin.
Well, Devina, Darshan is disappointed actually. But, talking about Reliance Industries, that is one stock which is slipped in trade. Dealers are indicating that at this point in time, domestic funds are said to be sellers here. And they're expecting the selling flows to continue here. So dealers have initiated some small, trading short positions on Reliance Industries, 1% down for that one. Adani Ports, that is one stock which has been doing well. Dealers are indicating a buy today, sell tomorrow kind of a strategy here. On good volumes, in fact, almost 55 lakh shares traded as far as Adani Ports is concerned. And finally, in the cash segment, dealers are indicating that HNIs are buyers in JM Financial and various financial services companies after the recent correction. So, at low levels, HNIs are said to be accumulating JM Financial. But Darshan has a few more stocks to talk.
Yeah, so one of the counters, it's down in today's trade, and that is CET is down 1.5%. But what we hear is that a large domestic mutual fund is accumulating CET at lower levels. So that's something that over the next few days we might see a little bit of traction on. The second stock that dealers are speaking about, and that is BEML, managed to hold on, one of the top gainers as far as the F&O market is concerned. Dealers indicate that HNIs are actively accumulating the counter in today's trade. And finally, the last stock that the dealers want to talk about is DLF, a large foreign institution, foreign brokerage, is actively pushing this counter to its clients via its sales notes. So that's something that we are watching out today.
Interesting. 175 and counting. Thanks a lot for that, Darshan. Wondering if, Sacchitanand, if DLF features in a list of stocks that can be traded on a day when the markets are down 1%, that stock on fairly decent volumes is up about 1%.
Well, the stock has displayed a good outperformance. In fact, if you look at yesterday's data itself, the range is around 175, 176 on the higher side, where it has been facing resistance. On the lower side, 168 has acted as a very good support. And if you look at today's session as well, the open low at 169.90 again, fits into that category. So probably, a breakout trade can be initiated above 176. Stop loss should be placed somewhere close to 172, and probably, the stock should be reviewed somewhere close to 180. So I think some long bias can be carried forward here, but the stop loss should be very strict at 172.
Interesting. I was looking at list of stocks which are trading at 52-week highs or otherwise. Aarti Industries features in that list. It's up about 3%, and 1502 is trading near about 52-week highs for itself. There are a couple of other small names as well, but Aarti in particular, 3.5% higher, rock solid in the session today. Mr. Chokkalingam, do you track companies in the specialty chemical space, and in particular Aarti Industries?
Yeah, both Aarti Industry, Aarti Drug, decent companies. Those who want to hold for more than a year, they can certainly buy them and hold them. In the last 3 to 5 years, both companies have done phenomenally well in terms of business performance. So one can buy and hold for medium to long term.
Okay. 2 stocks again from the PSU lot. One is a dredging corp that sees some interest in today's session, and the other one is ITI. That stock is up almost 12.5%. I wonder what's caused this interest in both these names there. 97 on ITI, the stock's up 10 rupees, and dredging corp equally. There was this bout of buying that came in, and Brijesh, I'll come to you. When the government divestment was announced. Currently, though, the last few days have been fairly lackluster, but today, once again, the interest is propped back in. Is there a trading play in any of these names?
RTI, definitely we can do it. Right now it's been quoting at 97 rupees 70 paisa zone. So if someone wants to play for a short term, then keep a stop loss of 93. And if someone wants to play for a BTST, then 95.5 would be the stop loss. Whereas on the higher side, 103, 104 would be the range where the resistance lies. Anything on that on the closing basis, because that 103, 104 is the recent swing high. If that thing has been crossed, then again say 10 to 15 rupees upside can be seen. So definitely one can go for a buy side on ITI.
Okay, 320. That's time when you get in closing strategies from both our experts. Sacchitanand, I'll come to you first. On a day which is an exact reversal of what happened yesterday, what would be your top closing strategy?
Well, I would carry forward a long and a short combination. In fact, the way ITC has been behaving in last couple of trading sessions, even yesterday we saw a strong build-up of long positions. Today, despite a narrow range action, the pullback looks very good. So stop loss at around 281 on the lower side should be placed, and I think longs can be carried forward. What we are observing is that the stock is forming a rounding base on the intraday charts, and this particular pullback occurs well to add on to the long positions. Stop loss should be placed around 281. The target of the pattern comes to around 293. On the short side, there are some short positions which are evident today in Century Textiles. The way the stock has reacted from its swing high from 930. Stop loss can be placed around 913 on the futures, and fresh shorts can be initiated. We are expecting that the stock should retest its 20-day moving average, which is placed somewhere close to 865. Even on the price charts, on the intraday scale, this particular breakdown looks like breakdown from a rising wedge. So both the data points are converging at around 865. So a stop loss can be placed around 913, and fresh shorts can be initiated in Century Textiles for 865.
Okay, interesting. Brijesh, what about you? Your top closing strategy?
So I have 2 on a buy side and 2 on a sell side. The 2 sell side would be one would be Reliance. As Reliance, after making a high of 1155, and in a couple of trading sessions was not able to cross, and right now it's been quoting 1138. So present rate or 1141 can go for a sell side with the stop loss of 1150 and look for the target of 1110 or below that. Another would be Maruti. Same strategy was been there. the recent swing high of 75.40, it was not able to cross that level and it's been trading below that. So one can go on a sell side. Right now it's been quoting somewhere around 73.40. So one can go on a sell with a stop loss 74.60. Look for the target of 70 and 50 or even below that 7,000 can be achieved. And the two buy side would be, one would be a just dial. The stock has crossed its 200 simple moving average and has been heading towards on the higher side. Right now it's been quoting at 513. So one can take a buy call with the stop loss of 505. Play for the target of 525, 526. And another would be Tata Power. On an hourly chart, the stock has been trading in higher bottom formation. And last half an hour or hour, the buying has been emerged. So right now it's been quoting somewhere around 78 rupees 25 paisa. So one can go for a buy side with the stop loss of 77.50. Play for the target of 81.25.
Okay. A sell on Reliance. Chokka, what's the take here? Do you believe that Reliance at somewhere closer to about 1100 is still a value buy?
I believe so. For those who are willing to wait a minimum year, there's a huge potential, the expansion of Fedcom business and also possibility of unlocking value from Zio and retail business in terms of demerging and giving shares to shareholder of Reliance Industry are very much possible. So therefore, on every dip, I would suggest a buy on Reliance Industries.
Okay, Mr. Chokkalingam, one top idea from your end to invest in?
Oh, my stock would be boring in the short term, but if somebody has to put money, I would suggest MNC stocks. After seeing Linde India proposal to delist, I believe a lot more delisting would happen because Linde India was quoted saying that they don't need a stock market, whereas the disclosure obligations have increased. And also the rupee has fallen 13-14%. So therefore, I am buying stocks like International Paper, which is a 75% subsidiary of US International Paper, and then Ineos Styrolution, that's again 75% subsidiary of Ineos of Europe. So these are the two stocks I believe would remain as a strong wealth creator in next 1 to 2 years.
Leave it at that, Mr. Chokkalingam. Thanks so much for joining in today and giving us that perspective. Appreciate your time. By the way, fundamentally, there's some strength in Castrol in today's session, 2.5 to 3% higher. Some reasons as to why the stock would gain as well, fundamental reasons, so with arms, crude, etc. The stock that stayed under pressure today, the whole day today though, one of them is HCC, the other one is Ujjivan Financial Services, which cracked about 6% at 216. Sacchitanand, you want to come in on Ujjivan?
Well, I think the stock has been consolidating. In fact, what we are observing is that since October, end of October, the stock has really not managed any strength above 240. Even right now, the way it has reacted below its short-term averages, probably we may see it declining towards 203 or maybe lower to that. So probably, this particular move can extend right up to 200 or sub 200 levels. So definitely not a long candidate. Probably, some short positions can be initiated here. The open high is still intact during today's session. So I think a stop loss can be placed somewhere close to 227 for any fresh shots.
Brijesh, would you go out and initiate a fresh shot at these levels on the benchmark indices themselves to carry home for a quick STBT tomorrow?
See, when the show started, I said that Nifty can be bought with a stop loss of 10,620. Anything below that, definitely one can go for a sell side. I'm not mistaken right now, 10,650 or say 48 it's been quoting. If someone has, as you said, if someone wants to do a STBT, then keep a stop loss of 10,680 or 85 and one can play for a target of 10,620. The major support which I am looking would be somewhere around 10,555 to 10,570. So definitely if someone has wants to do a fresh shorting, then keep a stop loss of 10,685 and go for a sell side.
Gentlemen, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop. So let's wrap them. About 1% lower for the key benchmark indices, not so much for the Nifty Bank, but the Nifty and the Sensex for sure. The mid caps and the small caps too have fallen, and the market breadth is not looking all that great. 1.45% down for the small caps, about 1% for the mid cap space. It's looking slightly soft in the session today. And you can see that in the advanced decline on the index itself, hardly any gainers. About 6 names and 3 of them barely scraping through. But GAIL, about 2.5–3% has stayed rock steady for most part of the day. In fact, that's the only notable name worth talking about. IndusInd Bank about 1.5%, Adani Port, okay. Aside of that, not too much. But look at the list of losers. Yes Bank 6%. Then metal names have looked very wobbly. So Hindalco, Tata Steel, JSW have looked very weak today. Dr. Reddy's from the Pharma Pack corrects. Indiabulls Housing corrects. Vedanta, of course, along with Hindalco, has looked slightly wobbly, as I said. There is weakness in technologies. So Wipro, HCL Technologies, and the others too have looked slightly wobbly, and Bharti Airtel and SBI too amongst the other names which have corrected in the session today. About 15 odd names, and all of them have fairly decent percentage cuts to themselves. So not the best of days for the large cap, but the mid caps and small caps have had it even worse, Devina. The market breadth has looked fairly shoddy.
Yes, Neeraj, and on the index itself, mid caps and small caps have declined almost double of what the benchmark indices have done. So for the mid cap index, I think we're down about 1.5%, and the small cap index is also around the similar amount. Taking a look at individual stocks, and I want to start off first with the gainers. So there has been some recovery in Page Industries. The stock's doing well after the steep correction that we saw post numbers. Stock's back at 27,500 in today's session. So a good 3.5% gain. You've got Castrol, which is one stock which right from the word go has seen an uptrend in today's session. No big moves there, but just a clear slide up. So 2.5% higher. PNB Housing, Godrej Industries are two of the other names that gained in the session. Tata Power and names within the PSU space, so Dredging Corp, ITI. These were stocks that actually saw a heavy build up in terms of interest. So you got 6% in Dredging Corp, ITI is about 12% higher. And amongst the losers, and HCC is a stock that's down in the session. You've got Jindal Stainless, which is losing steam as well as the day progressed. The stock as well worsened. Ujjivan Finance is a stock that's taken a cut in today's session to the tune of 6.5%. Minda Industries 5.5% lower. Gen Irrigation, Deepak Fertilizers, and Max India. So the list of losers obviously is that much more pronounced. It's a longer list, and the kind of cuts, the quantum of cuts in these names as well are significantly higher as compared to the benchmark indices. So 1% on the Nifty, 1.2% on the mid cap index, 1.5% on the small cap index, and that's the tally that we have for today's session.
Yeah, well, so on balance, it's looked weak and quite a stark contrast to what's happened the last few days. But weekend during the day is the key point, and in line with what the world markets have done. The Nifty Bank too down about 1%. The market breadth is terrible. Bring it up, but yeah, close to 1:3, I presume, in favor of the declines. Actually worse than that. So
1:4, I think.
Yeah, the lowest point, almost there. So not that great for the market breadth for sure.
Turnover then, and quickly pull that up to see whether or not this kind of sell-off has been backed by higher volumes as well. So not that much. It's still below average for the futures and options side. Even the cash market has not seen too much. 26,000 odd crores in terms of the NSE cash. BSE cash a little bit more abysmal at 2,300.
It all looks slightly weak, and the contributors list will come up on your screen as well. Not looking the best. Reliance top contributor there, but financials and IT have in a big way contributed. Actually, the meat is on the losing side. Gaining side, there is hardly anything worth talking about.
All the heavyweights out there, besides the GAIL, which has managed a 2-point gain and nonetheless being the top gainer, Bajaj Finance, Adani Ports, and that's about it. I think there was a handful of just 4 or 5 stocks that ended in the green. Sorry.
Yeah, so very wobbly, but with the world markets doing what they're doing, Devina, we don't have too much of support. Won't be surprised if the weakness looks like persisting tomorrow.
Actually, before we go, should get up the currency as well to see, while we've shut shop for the equity markets, there was that strength that was pretty pronounced right in the start for the currency. So we're at about 71.5, probably not at the highest point of the day. We went closer to about 71.3 odd, come back down from there, but a decent enough day for the currency.
Oh yeah, you're right. We are at the lowest point of the day currently.
All right, so let's take it to our guest and get some closing thoughts from Sacchitanand as well as Brijesh. Brijesh, I'll start off with you.
See, no doubt, Nifty has closed to the day low, and it looked like we might open a gap down opening. So 10,550, 10,560 would be the first level to watch. And if that thing has been broken, then another important level to watch would be 10,400. Just now I have seen that chart, and it looked Bank Nifty is looking very much weak. So it's got to somewhere 26,093 or say 26,098. So I'm looking Bank Nifty opening somewhere around 100 or 150 point downside. So 25,800 would be the level to watch very closely. If we trade below that, say for 15-20 minutes tomorrow, then we might drift more, and then 25,450, 25,500 would be another level to watch. Whereas on the higher side, 26,250 would be a tough resistance to cross. Bank Nifty definitely look weak, so which might make the Nifty more down. There would be more pain coming up.
Okay, got that. Sacchitanand, what about you?
Well, as we discussed, our main focus is, players somewhere is very much in line on the positive side. If you look at the entire construction, the 5-day exponential moving average has been supporting the markets well, and today as well, the average was placed somewhere close to 10,660. On the spot, I think the closing is established somewhere close to 656. So probably, it is near to that support. I would not call it as a top immediately. Probably, we may see some kind of a consolidation here. From tomorrow's perspective, I think 10,675 would be a very critical level. In case if you see markets opening there above it and sustaining there, then probably we may see a rebound back to say 10,770 zone. So I think there's a definite range which is very much evident here, 10,600 on the lower side and 10,800 wherein the markets could consolidate. From tomorrow's point of view, I think 10,675 would be very critical on the spot, but the bias remains positive until 10,620 is held on a closing basis.
All right. We'll leave it at that. Gentlemen, thank you so much for joining in today and giving us that perspective, or those perspectives and your ideas as well. It's a wrap on this edition of Countdown, but before we end, Reliance Nippon Life AMC has chosen to manage this round, of the CPSE ETF offer. The offer hopes to raise about 8,000 crores from the issue. Ridhima Saxena spoke to Sandeep Sikka and started out by asking him about the constituents in this issue.
So if you were to look at it, it's a far more balanced and and a diversified portfolio compared to the earlier ones. And what makes us more excited, like I said, it's based on the companies where the government is holding, the stock, and I think there's a limit available. That's one of the reasons. If you were to see, there are two companies also which have been reduced. Earlier we had Container Corporation and Engineers India last time, where the government has already hit the disinvestment target, and so those have been dropped. So like the way we see is, it's not just the power sector, also within power sector, power, infra, you have construction, you have financial services. All these are going to be responsible for the growth of the country. And clearly, this portfolio is one of the best portfolios for investors to capitalize on that.
What other government mandates are you looking or assessing currently, and do you see you'd be a part of EPFO, ESIC or other such mandates as well?
No, we are honored and privileged. We have been working in the Government of India on various fronts. We are here for the launch, so we are participating in the disinvestment program of the Government of India, and this is one of the largest ones. 8,000 crores. This is going to be the largest offering that we are seeing. Other than that, very recently, Reliance Nippon Life also was honored and privileged. The government chose us for millions of investors for the fund management of ESIC. Before this, we are managing EPFO, coal miners, and at any given point of time, we'll be happy to contribute to Government of India in any form and manner. We'll not be able to talk a lot about the future mandates, but recently DPM has also come out with launching a debt ETF, and taking into account our experience, the fact that we've been associated with the Government of India and DPM over the last 4 or 5 years. We're the first one to launch this. We clearly will be very happy and honored to work on that project also.
Considering the markets have been volatile, we've seen that even though SIPs have been robust, there has been some correction in the equity AUMs. What has been the impact for you, and how do you see, going forward, the markets would be and the investor sentiment would be?
We clearly believe the worst is behind us. I think whether you look at the last 2 quarterly earnings, they are improving on all the headwinds. Whether you see cement production is going up, the bank credit is improving, and I think we clearly see that over the next 2-3 quarters, you'll see better numbers. The volatility is always, when you're investing in equity, volatility will always be there. I think in India, fortunately, a lot of things, whether to do with oil, currency, everything is moving in the right direction. Clearly, I think we have seen a lot of retail investors maturing during this volatility. We have seen new and more number of SIPs getting registered, unlike in past where investors used to panic. And I think especially, I think the positive trend has been, we've been operating in a lot of small cities and towns, a lot of new cities where mutual fund investors are not there. A lot of new first-time investors are coming through SIPs. So we see this trend very positive and expected to continue.